It's Mike Langford. Welcome to another episode of the SoFin Podcast, part of the FinServe Marketing Podcast Network. This week on the show, I have one of my favorite entrepreneurs and favorite people in the world on the pod with me. His name is Travis Schwab. He is the CEO and co-founder of Eventus Systems, based right here in Austin, Texas. He was also one of the early entrepreneurs to demo at SoFin at South by Southwest. He actually demoed at the second one, 2016. And here's how I described Eventus Systems in one line for people who are registering for the event on the Eventbrite page. I described it as super nerdy awesomeness for reducing trading risk. Really simple. And I can't believe they haven't adopted that as their marketing slogan that goes out to the world. Anyways, it's kind of an arcane business that they're focused on, but it's a very big business that really shapes our industry and shapes the financial markets at large. There are very large trading desks, and you've seen them in the movies, right? Where a office floor full of guys at their desks trading stocks and bonds and all the other types of securities, options, and so forth, futures. And many of these firms are doing what's called prop trading, right? This is trading for their own book, the company's assets. They're trading them. These aren't client trades, but sometimes they are client trades, right? Whatever the scenario is, a lot can go wrong, right? So number one, those types of trading desks can get in trouble with regulators if they're doing some stuff they're not supposed to do. So the Eventus system provides surveillance and regulatory oversight for that type of trade. But they also provide risk management because occasionally too much trading and not everybody knowing what they're doing, a firm can trade themselves into oblivion, right? Occasionally you hear about the rogue trader who doubles down on a position or quintuples down on a position because he's afraid of a loss or whatever. That stuff happens, but more often than not, some of the challenges happen when one trader doesn't realize what another trader is doing and they weight risks and they really expose the firm into some big potential challenges. So Eventus Systems provides a solution that makes it so that stuff doesn't happen. So really, really cool stuff. Why I wanted to get Travis on the show is not only because I love Travis, and as you'll hear, the chemistry between myself and numero uno, that joke will become relevant later in the podcast. The chemistry between us is really great, but I wanted to have him on the show because I saw firsthand how challenging some of the early days were in terms of getting Eventus up and running, getting those early enterprise clients in the system and closed and onboarded and so forth. And it is challenging. So if you're building a enterprise-based startup where you're going to be selling into these big companies, you do have to prepare yourself for a long sales cycle. You do have to prepare yourself for some challenges. And then if you're in a really niche-based solution such as Eventus Systems, there could be some other challenges in terms of hiring and so forth. So I want to get Travis on and talk about those types of things. And by the way, you're going to love Travis. It's, again, sounds super nerdy, but it's also got the awesomeness part in there. And Travis is awesome, fantastic. He should have a podcast of his own because he just comes through great on this pod. Okay, enough puffing up my buddy. Also, this week, make sure you swing by the Modern Financial Advisor podcast. I had Terry Mullen on the show with me, and we did a deep dive on some of these solutions that are now available for RIA firms. And what's really interesting about RIAs, today's current RIA firm, is they manage trillions of dollars of assets, yet most of them have 5 or fewer advisors under their roof. And for a long time, they just operated like small businesses, and many of them still do. But what's happening now is through firms like Trulytics, these small businesses are starting to have some of the same technological firepower at their fingertips that the big boys have, like the Merrill Lynch's and the Morgan Stanley's and the Goldman Sachs and Wells Fargo's. They're starting to have that type of stuff, not just for trading and client management. They've had that for a little while, but really on the business management side. So for performance analytics, for performance on their business, not performance on their portfolios, for recruiting, for continuity planning, and for M&A matchmaking and so forth. So really, really cool stuff. Check out that podcast, Modern Financial Advisor Podcast. Also, later this week on the Advisor Financing Forum for Skyview, I have Kara Miller on, and she heads up their sellers practice management area for basically helping out RIAs and independent financial advisors who are selling their business. And we're going to really get into some really interesting stuff, particularly with some of the stories she has to share that I think you're going to really get a kick out of. So if you know somebody who is an advisor who owns a wealth management firm who's either looking to sell their business or frankly looking to buy a business, you might want to tune into that. You're going to learn a lot from Kara with her experience in that space. Okay. All right. Without further ado, let's get to it with Travis Schwab of Eventus Systems. Boom. Travis, buddy, it's been a very long time in the making. I'm so thrilled to have you on the show. Welcome, buddy.
Michael, thank you. I miss you. I miss you in this world that we live in, and hanging out in Austin and having Lupe tortilla. Shout out to Lupe. We expect some free tortillas from that. But
exactly.
No, great to be here. I love what you guys are doing. Love what you're doing with the podcast network. So super excited to be involved. I appreciate the invitation.
I tell you, I miss you as well. And it's really interesting. You know, you and me both fall into this category of being huggers, right? We're definitely like, hey, I see you. Let's go.
Bring it in. Bring it in for the real stuff.
And this social distancing thing is really crimping my hug style.
I know. I totally agree. It's too much. I feel like my wife's like, okay, enough. I'm like, I need a proxy. There's not enough interaction here. The kids are like, Dad, lay off. It's too much.
Get off me.
Exactly.
Oh man.
It's
exactly.
Too much.
You're sweaty and disgusting. I hate it. That's my daughter always tells me. She's like, you're gross. Get out of here.
Yeah, I know. It's just this constant stiff arming happening. And I'm like, no, this is the only hugging I get now. So we're doing it.
Yeah, that's funny. So we've, as I mentioned, it's a long time trying to get you on the show. I mean, a lot of logistical stuff happening and the like as we're all going through. But one of the reasons why I felt it was so important to have you on one of these early pods for the SoFin podcast is you were at the first ever SoFin at South by Southwest event, and you demoed Eventus and the Validus solution there. So I thought it'd be really cool to have you on in the early days, and especially since Eventus has grown and is really on a nice trajectory, and you've grown the team substantially and so forth over the years. So maybe we can kind of start things off with maybe an elevator pitch.
Yeah, no, happy to. And I love the SoFin event. Obviously, we were privileged to attend that. And, we're not a great fit in general for kind of these public type forums because it's a very niche product that we have, which we'll talk about, our niche for our industry. But love doing that. We barely, during that first SoFin, we barely really had a working product. And then to try to demo it in the ruckus affair of SoFin during South by was a lot of fun. So love what you're doing there. Hope you can continue to do so going forward. From an elevator pitch. So we are we're a software company focusing on making financial markets safer around the world. And we do that by helping firms, and those firms are brokers, exchanges, banks, trading firms. We help them with their trading surveillance and market risk solutions, and a little bit on the anti-money laundering as well. But in general, we're really focused on markets, making them safer for all investors. And we do that by providing really enterprise-grade trade surveillance and market risk solutions.
It's interesting you mentioned that you didn't feel like, these public facing, or we'll call it maybe retail facing types of conversations are always, the best thing for Eventus. But to me, it's really fascinating because I think it's really important for founders of other fintech companies and people in financial services to understand some of the driver technology. And that's what I think of when I think of Eventus, is that there's a driver technology underneath the hood of a lot of solutions that you use whether you're a retail financial consumer or if you are an institutional player. There's lots of stuff going on underneath that hood that make it possible. And RegTech, as you often describe Eventus as,
is really important, right? It's really important for the markets to be safe, to be something that you can trust, that we know there's not fraud going on there, and we know that people aren't trading themselves into oblivion. So I really think it's important for people to be aware of this stuff.
No, and I appreciate you saying that, and obviously we think it's important as well. We started, and you and I, kind of even working together early on, 5-6 years ago, describing ourselves as a fintech company, and that quickly moved to a regtech, just because fintech has become, payments or any of these kind of other areas that we just don't touch, right? Capital markets is a massive ecosystem. We are in very specific areas of trading, and obviously we think it's critical and important and everyone touches these markets, right? The financial markets touch everyone on the planet. So whether it's you're buying stocks for your retirement, you're drinking orange juice in the morning, you are buying Bitcoin as a hedge, every time your loan on your house, every one of those transactions happens within some type of financial market, and we are smack dab in the middle of that, making those core markets safer and more transparent. And you do that because you want transparency, you want predictability, and markets perform better when people know and trust the outcomes. And so we're literally watching that unfold in the digital asset space right now, which we've been participating in for several years now. But yeah, we are right in the middle of that, but it's still, it is a niche conversation. We think it's important, and a lot of people participate that, but it doesn't necessarily get the interest of, we're going to, stop everyone from paying too much on their monthly memberships everywhere with AI. Those are the types of things that we're just not involved in.
Yeah. So what was the big aha moment you had that led you and the founding team to make Eventus a reality, right? You came from that world of prop trading. So maybe I think, we kind of start there. What is prop trading? But what was it that you saw that made you go, you know what? I'm going to launch this thing.
Right. Stupidity, I think, more than anything else. No, for us, proprietary trading, a lot of the team are from proprietary trading space here in Austin, Texas. We are all at a firm. Proprietary trading is, as compared to a mutual fund or a hedge fund, where you're trading other people's money, right? You take in money, you have an investment strategy, you're trying to make a return for outside investors. Proprietary trading is you're trading internal money. And so similar ideas, you're trying to make money, but you're trying to do it for your own team as compared to external investors. And so this firm had been around really since 2000. I was running the regulated entity at this proprietary trading firm that was kind of interfacing with all of the various exchanges and regulators. And we had a big footprint. And so, meaning at certain days we were trading more than Citibank, and that's not exaggerating. Our little firm there in Austin, Texas would trade hundreds of millions of shares of stock on a daily basis, other asset classes as well. And so we had a big bullseye. And so you talk about what was kind of the DNA or the founding idea is that bullseye on my back was red hot all the time because of our outsized trading that we are doing really around the world. And so we kept coming up with tools. We kept trying to make those interactions safe and make our engagement with the markets as safe as possible, because why? It was our own money and we didn't want to lose it. And so for us, investing in these tools, well, all of the interactions with the regulators were great. And you ask them kind of what's best practices, and that's not what they really do. They try to kind of look for where you're not doing well as compared to giving you options on how to do better. And so I kept going out into the marketplace, trying to kind of audit what we were doing internally. And the solutions I saw sucked. And so I knew that there was an opportunity out there. I knew that there was a gap in the marketplace. And then the trading firm at the time was going through some transitions. And so I kind of went to the founders and said, this is probably a good time for me to do this. And they loved the idea, super supportive. It took a while to get that transaction done, about 6 months, get the team kind of agree, because we ended up buying some IP from that firm to give us a head start, and funding and everything else. And so it was a great opportunity. You tick all the boxes of how you want to do a startup, but it did take an appreciable amount of time.
Yeah. Was this your first tech startup?
Yeah, that I did specifically. Absolutely. I'd been in small companies and startups, even in the late 90s. I was with a technology software company in the capital market space, and I was probably employee, 20 or something like that. So I've been at early stages, but this was absolutely kind of my first one where I was numero uno.
Numero uno. That's what I'm going to see now. You said, what should I call you? Numero uno.
That's right.
From now on, you're never going to live it.
Bring it.
It's going to be on you.
I love it.
Well, Mr. Uno, how did you adjust to startup life? Like, what was some of the early kind of growth moments for you? Because having made that adjustment myself, coming out of big company and having worked at smaller companies, but all of a sudden you're in it, right? How did you make that adjustment, and what were some of those early growth points for you?
Good question. I don't know how, if there was some mind shift, or this was just something I've always just kind of been ready for. My dad always kind of was a sole proprietor and entrepreneur, and it was things I just kind of knew about growing up, and I just had a mentality, and I was effectively running that kind of regulated entity within the trading firm itself. And so I had, a lot of ability to guide the business in the way I saw fit. So this was a natural evolution. And so from did I all of a sudden do anything different or acted differently or things like that? No, but I was just religious about a couple different things. And one was getting us into the market as quickly as we could, right? And so I relied on, kind of every network connection I had, good connection, trying to get every meeting I could, make sure the team was cohesive at the same time, and that we just kept driving to getting that, whether you call it an MVP or whatever it is, but getting something into the marketplace so that we could start really getting real experience. Because you can draw things on whiteboards, you can, plan everything, but it really, it just doesn't matter until you are talking to customers, in a customer, and go that path. And so for me, that was absolutely critical. And then just keeping our expenses, I've never been, you can talk to anyone. It's not like I'm thrifty in any way, but just keeping our expenses is absolutely as low as possible was kind of the other mindset I had. And so, we've just kept. It's been this, it's not been meteoric in any way, shape, or form. But for us, it's been basically trying to double our top line revenue every year. And, thankfully we've been able to do that. And it's just absolute brute force, hard work and dedication by a whole group of people, and keeping, focus really there's no magic in it as far as we're concerned. For us, it's just unmitigated effort and hard work.
That's a fantastic segue into the next topic I wanted to chat about, which was, one of the big reasons why I wanted to have you on the show, beyond like our history together and how big of a fan I am of Mr. Numero Uno and Eventus, is I wanted to hear how you and the Eventus team have managed to successfully navigate the enterprise sales world as a startup, right? Because you and I have had this conversation a few different times about how slow that enterprise sales process can be. And for those who don't know, it's often 18 months to close a deal, especially if you're selling into financial services companies. And then oftentimes once you close that deal, there's a pilot program or whatever. So it is a slow process. In the early days, you had to convince people that they actually needed a solution like Validus in the first place. So talk a little bit about that process and what you've learned over the time.
Yeah, we're still learning. Like we try not to step in the same puddle on a daily basis. But that was, Michael, that was I there's a lot of mistakes I've made. The list is long and voluminous, but one of the things I absolutely did not appreciate when we started was how long that sales cycle was going to be, and in fact, it really happened because of the financial crisis. Already there was a movement to this really battening down the supply chain process for a lot of these financial entities because they were getting focused by the regulators. The regulators were really focused on third-party relationships. And so you had this macro trend happening post-financial crisis that I really didn't wait enough during our thought process and kind of who we were going to sell into. So that continues. I mean, I'm not even joking. I was just talking to my head of sales just before this call, and we were talking about our sales cycle and our numbers. And we just closed a deal that took 4 years to close.
Wow.
4 years. And it's not like it died and it was effectively simmering. It would boil and then simmer and do that for the last 4 years. And we finally got it done. But then we're trying to look at our metrics, our KPI saying average days to close. Well, this blows the whole damn curve out of the, that's not reflective, but that happens. It happens. And so you're right. And you really, when people are planning these type of entities and selling into these type of organizations, if you're not allocating a year and a half, you said 18 months, that's exactly right, or even longer for not just, trying to sell into the organization, trying to close the business, trying to go through contract. Once you're in there, are they going to, if you're a super small company, they're going to force you into a proof of concept, getting the terms of acceptance there, and then just getting paid. These guys, it could take 6 months just to get paid, even though they're like, yeah, we'll take care of it. And once it starts, it's great and it's really hard to rip out, but there is a huge amount of friction at every step of the process to where if you're not building that into your sales model, you're going to run out of money, or it's just not going to work, or you need to find another group of clients where you have faster, more sales velocity. Because on the enterprise side, especially within the capital market space, it can be brutally long, and it's just built within the organization, and it's only getting worse.
Well, and it's that old saying, that's it. It's going to take twice as long and cost twice as much as you think it's going to cost to get a startup off the ground. And that's generally true for every startup. But I think it's really, I'm glad you went into as much detail as you did about how long that sales cycle is and what you've learned and had to work on over time, because it's so important. Many founders are creating enterprise-based firms, and they just have to know that walking in, that this is not going to be something you flip a switch and you're going to suddenly have half of Wall Street using your
that's product. Right. And you just one little aspect of that we learned very early on is a lot of times these banks will say, well, all right, we'll do a proof of concept and you'll do it for free. And we did that one time, and then we quickly stopped doing that and would never do that again, because if there's no skin in the game, you can't get them motivated, because everyone's working hard, everyone has a day job, and then you're now, adding something into that mix. You have to make it mean something to that client to get them to do more. And when you are trying to sell something new, you're asking someone to do more than they're doing today. Whether it's a switching cost, you have a implementation cost, training costs, whatever all those things are, but you have to add enough value or lower the cost or lower the TCO, whatever any of those buying principles are. You have to have something that's compelling enough for them to do more. And I guarantee if you try to do something for free, you'll get nowhere. And so those were just, that first lesson we try to, because we had banks that were willing to take meetings. Thankfully, I've been, on Wall Street for a long time. And so I have a good, strong network. And that really was one of the only things that kept us going early on until we started to get some traction. But that's not enough. You have to have a compelling product, and you have to sit down and be willing to hold the line on charging an implementation fee, because your time is just as valuable as theirs. And that takes a long time to get that message across.
It's in addition to the sales cycle, I would imagine the funding cycle. So you mentioned you needed to raise extra money. You need to have more money so you can make it through these long sales cycles. What are some of the things you learned along the way, or you wish you knew at the beginning as you started raising money from VCs and other sources?
The list is long. Everyone says to get more than you think you need, and you just said it. You need twice as much, and it's going to take twice, and to handle the twice as long. But it's also hard to get twice as more, right? It's not
right.
It's not like you're like, oh, here, I need 2 million. I'm sure everyone wants to give me 4 for the same valuation and everything else. And so that was very challenging. Thankfully, we had a very receptive group of kind of those early investors. They were former partners of the trading firm, friends and family. And so we had, again, a really soft kind of, or a better opportunity than a lot of just startups that are bootstrapped and then trying to go that way. And so we raised money, early on. We had a good group of folks that believed in us because they had worked with us in the past, knew our pedigrees. And so that started off, but then, immediately I thought, okay, well, we'll get a product out within a year. I'll be able to raise money off the back of that because we'll have, a handful of customers to work from. Well, that was just wrong. Again, mistake number 55,000 out of a billion. But and so, you have to think about, all right, do I do a convertible note? Am I going to sell more ownership here? And you have to keep the organization going. And so, the biggest lessons for me, trying to go to the right investors, first of all, right? There's in general, especially on the institutional side of investing, you really need to do your homework about the types of investments that they're looking for, your minimum revenue, minimum run rate, minimum, all these different kind of check boxes, because a lot of these firms have pretty specific playbooks for how they invest. And you're going to waste a ton of time if you're talking to folks that just are never going to invest in your organization. And so I think it's super helpful to understand that going in, is really hone that. First of all, hone your universe of potential investors, then obviously start working on the pitch. And so those are just trying to focus my energies on that money raise, and then picking my time to when we would actually go into the institutional side as compared to kind of the high net worth and friends and family and things like that. So we've done four fundraisers in our history. And the last one, which was by far the biggest one, our Series A, was not easy by any stretch of the imagination. But because we had reached a lot of milestones that ticked a lot of these boxes for these investors, because we had shown financial prudence and had really shown product market fit, it was a much more straightforward conversation to where we had people competing to give us money. And that was an awesome opportunity for us to pick then that right mix of investors. But there was no way we were at that point until we were there, right? And so that's just kind of picking your timing and honing in on your investor group is, I think, kind of two key areas that you need to focus on.
It's really smart advice.
Okay, hey, listen, if you have a fintech, reg tech, insurtech, whatever tech that's related to some form of financial services, ecosystem, world, touch point, make sure you check out the BZ Awards because the Benzinga FinTech Awards are coming up in November. They may be virtual, as you heard me mention on the last episode, but you should definitely check it out and get involved because it's a great way to showcase your startup. It's a great way to mix and mingle with some other founders, some angel investors, and some VCs in the space, and potentially your customers. So again, like startups, just like Eventus Systems, one of the biggest challenges for those enterprise-based startups is how do I get into close quarters and sell into these big enterprises? Because the process is oftentimes long and convoluted. Well, one way you can accelerate that type of stuff is to get in the room with them in a more social situation, and also when they're kind of in that eating or feeding frenzy, right? When you go to a conference like the FinTech Awards or like SoFin at South by Southwest, what's happening is you're in a room with people who are there for a reason. They're there to learn about the latest technology. They want to see startups. They want to see what are some cool solutions that they can bring into their firm. And they're often looking to get things done and get things moving a little quicker. And we've actually had lots of experiences with firms finding that type of success when they demo at SoFin at South by Southwest. And as Jason Raznick will tell you in next week's episode, because Jason and I just recorded an episode together that will be published next week, he's seen a lot of that same thing at the FinTech Awards. So make sure you do register for those. You can do that and get a discount code. Use the SoFin VIP, SoFin VIP code at checkout, and you'll get a discount for that event. Okay. All right. Let's get back to it with Travis from Eventus.
So let's switch gears a little bit to one of the things that personally I have a huge debt of gratitude owed to you for is that you taught me something really early on about the value of scale for SaaS solutions. This is something we talked about several times, is that, the financial industry is somewhat famous for kind of rolling their own when it comes to some of their tech solutions. And that's a challenge when you have a bunch of quant geeks around and they have just enough coding skill to be dangerous, right? They're like, I'll build my own solution. I don't need Validus and Eventus. But one of the things that you mentioned really early on was, look, there's a value of scale, right? Of this being a solution that is in place across multiple companies. And I thought maybe you could kind of share that concept with the listeners because it made a huge impact on me.
Well, I appreciate any little insights I can give you, Michael. I find I get the same from you as well. So, from a scale standpoint, that's always a bit chicken and the egg kind of challenge. Is until you get there, you can't provide it. So, but for us, one of the value propositions that now just keeps resonating, it's that network effect that every software company likes to talk about. But the product only gets better, continues to get better by a multiple as more people are participating in the product. And so you want that external validation. That was the original reason, one of the original reasons why we started this firm, is I kept going out into the marketplace to try to find that external validation on what we were doing internally. We were rolling our own or eating your own dog food or whatever analogy or metaphor you want to use for that. But that only goes so far. And you will, you get your blinders on, and it's hard to know where the gaps are. It's hard to know where the problems are when you're constantly focused on your own code or writing your own code. And so that external audit is so critical, especially in these type of regulated industries that we're working for. And so it's really one of the core areas and value propositions that we bring to these firms, especially whether it's a broker or an exchange, but especially on the proprietary trading side, it's full of a bunch of smart people. They think they can write this code. Well, first of all, that's not the value that they bring to themselves. They're a proprietary trading firm. They're trying to come up with different models to trade, make more money. They're not trying to write super kick-ass surveillance systems. And so you want them to outsource that. And then that secondary principle is you outsource it to us because we can really test and serve as a really good check on what you're doing internally to bridge that gap between what you think is right and what the regulators think is right. And so that feedback loop for us, that network effect at scale really has been resonating and really building on itself especially over the last couple of years, where we have this really diverse set of clients and putting those changes. They're like, hey, we need this report. We need this new surveillance procedure. We need this new feature. We need this new alert. Whatever those things are, they just funnel right back into the product. We're still iterating super fast to make sure that those changes, that scale gets right back out into the customer base. And so for us, that just makes the product that much better. And, every new customer adds to that mix.
I got to tell you, the number of times that I have shared kind of this learning with other startup founders it's got to be in the more than 10 now, right? That, you want to get your solution in the hands of many customers. And then for the customer, they need to know, like, listen, this is more valuable than you doing it yourself, because you're going to be learning from everybody else in the marketplace versus just kind of navel gazing and only having that tunnel vision with your own stuff. That's really smart.
That's exactly right. And thankfully, at least within the governance organizations of most of these firms, there isn't proprietary knowledge there to where they're trying to keep it to themselves. And so they're sharing it out to the community because they want to make the market safer. They want the regulators to understand what they're doing. And so there really is that impetus, that drive to get those ideas, those interesting ways of looking at the markets, or a new idea, new way to do alerts and look at market manipulation out. And so they share that with us, and they want that to go right out into our community. So it's a strong effect, and it's something that really works well within our little ecosystem.
Yeah. So now, we mentioned earlier when you founded Eventus, you took a small team of folks with you, and you had the insights and you already had the knowledge because you were basically doing this stuff at another firm. You kind of broke out and created a new company based on some of the learnings and the tech. But now, as you're growing, recruiting obviously is important, right? You have to bring on talent to continue to expand the business, and you can't just recruit any newbie coder, right? Who just happens to know the language that you're building your solutions in, because our industry is, and you're part of the industry, is very niche based. So you have to have some level of knowledge, and then because you're building reg tech, it has to be somewhat bulletproof from a security perspective too, right? So it's not just the average coders. How is that recruiting process going? How do you find high quality folks?
Yeah, it's what I'm living now every day. We kept the team really cohesive and compact for almost 5 years. And now we've grown over the last 4 months. We've, grown ourselves more than 130%. So, which during a global pandemic is interesting in and of itself, which we can talk about. But critical on every level. Exactly what you're saying is, how do we get people into this organization that can join a team that has been together not just for 5 years at Eventus, but they were, I worked with them a big portion of those folks. I worked with 5-10 years before that, and a lot of those team members worked with themselves before that together earlier. So real cohesion with this group, and then you're bringing in. You want to bring in new blood to challenge what we've been doing with those blinders on for the last 5 years. And B, then getting people up to speed as quickly as possible. And to use the term that everyone knows now, flattening the curve. But flattening the curve, not from a pandemic standpoint, but flattening the learning curve within this organization. And so that's probably my number one 1A, 1B task that I'm doing every day is, how do we get all the data out of our heads into a set of systems, apps that people can come in, learn from, and be productive. So that's the first part. You talked about recruiting. We have experiments going on all over the place with the folks that we're bringing in, not experiments themselves, but just how much knowledge do they need to know coming in for them to be productive? And we don't have clear answers yet because it's been so fresh, but that's one of the areas. This is such a niche area, and people buy our software, license our software, not just because it's good software, but because we know what the hell we're talking about. And we want to make sure that that experience continues with every new person that comes in, whether they're client facing or not. And so if you don't know what the hell you're talking about, how do we make it so that you do as quickly as we can? And so it's a struggle, and I don't have some magic bullet yet. It might be my ask for this group of people is, how do you educate team members coming in very specific ways as quickly as possible? Because we're looking at external resources. We do webinars, internal webinars. We're doing videos of our products. We're trying to have reading materials and just as many of these resources as you can, but it's still hard. And so that's, you say it exactly right, as it's very hard, and we're not decentralized and compartmentalized enough to where, okay, if you've done whatever, accounts payable over at one company, you can come in and do it here. Now, maybe you can on accounts payable, but that was a bad example. But almost any other role, you probably need some A, capital markets experience, and then B, if you have some measure of governance or regulatory experience, it's going to just allow you to be much more successful, much faster.
Yeah. I mean, I've seen that more often than you can imagine, where, firms in this space, they're trying to grow this fintech startup as quickly as possible, and they're grabbing everybody they can off the street. And it's the learning curve, as you mentioned, is very steep because this business is complex. And many of the people you're selling into and looking to service with the product, they're lifers, right? They've been in the financial services industry, or in your case, the capital market space, for their whole career. They came out of college and entered it in many cases.
100%. No, 100%.
So that's like their DNA. That's like they bleed this stuff. And so, they didn't learn everything they know overnight. They've accumulated it bit by bit for over 10, 20, in some cases, 30 years. So it's not a particularly easy thing to fix. So, all right, that was your free, by the way, you had your free ask. So help Travis solve this problem of like getting people in who may not have, all the body knowledge they have, but how do they rapidly get up to speed? I imagine you have another ask, because on this show and at SoFin, the event, I expect everybody to have an ask of the audience. So you've got people who are listening to the show when it first comes out, and people might be listening to the show a year from now. What is something that people can do for you if they're listening to the episode?
Super helpful. If folks can, I'm all ears on, training, rapid training techniques and being able to bring up to speed. That's really would be helpful for us. The other thing that I would like to ask the audience is, and I kind of teased it just a little bit, is our third product line is anti-money laundering. And so we do that for at least a half dozen of our mostly APAC, our clients in APAC, and we're trying to figure out how, because every fintech, every company that deals really in international relations in any way, international business, has some anti-money laundering requirements that they have to fulfill. And I want to understand what the listeners are doing for that. How are they fulfilling their AML requirements? What kind of tech are they using? What vendors are they using? Are they happy with it? And just to do a little market research to see if this is an area that we should keep expanding our product line, because we think it's interesting. And there's a lot of competitors out there in this space, but haven't come at it really from our side of things. And so we think there's an interesting opportunity, but I'd be very curious to see what your listeners think if there is, and if the market's already saturated, and if not, then tell us why it's not.
All right, listeners, you heard him. Let's get on it. So numero uno has spoken. He has a request for you.
Here, here.
Okay. All right, very cool. So beyond that, what's next for Eventus? What's on the near-term horizon to kind of close us out here?
Yeah, scale, and scale. I'm like the free commercial. So for us, it's really, we're trying to continue that track record of doubling every year. It gets harder as you get bigger. So that's what we're trying to do. We're trying to double our top line revenue again this year, and trying to do it, over the next couple of years. And so in order to do that, we need to add resources across the firm. We need to engineer, kind of make sure the product is ready to scale on that size as well, to go from 50 to 100 to 200 to 500 customers, and make sure we have the right infrastructure from a client success standpoint, from a sales standpoint, marketing across the organization. And so that's really what we're doing. And, it's really fun to be able to do this at this time in the world. I mean, the financial sector has been resilient during this kind of global pandemic. So thankfully, our customers are still picking up the phones. They've been disrupted somewhat because of everyone working from home and business continuity. But by and large, we've been very fortunate in the types of firms that we sell into. Things have slowed down, but not as much, I think, as it's affecting a lot of other companies and other verticals. And so, yeah, for us, scale, and scale.
That's fantastic news. Well, Travis, if people want to reach out to you, and I'm sure some of them do, whether it's a new recruit or somebody who has an answer to your question, your ask about anti-money laundering or anything else, what's the best way for them to get in touch with you?
Yeah, Travis at eventussystems.com, EVENTUS systems.com. So please do reach out. Love to hear any opinions, thoughts. If you're interested in what we're doing, love to talk to you about it. So really appreciate this opportunity, Mike. I love talking to you, man.
Perfect. I appreciate having you on the show. Thanks, buddy.
Thanks. We'll talk to you soon. Stay safe.
You too.
Okay. Huge thanks to Travis for joining me today. I love it. So anytime I get a chance to hang out with Travis, and I hope I get to hang out with him in person sometime soon. I miss grabbing some beers, or with Travis, by the way, vodka and soda. Not often you see him with a beer. He's just kind of like giving me a Tito's and soda, not Tito's and tonic type of guy. So if you want to win your way into Travis's heart, now you know. Anyway, super grateful to have Travis on the show. Glad you joined us to listen. If you have an idea, a suggestion, or question for the show, please do send them in. You can reach me at mike@finservmarketing.com, or you can check me out. I'm at Mike Langford pretty much anywhere on the socials. We have been getting lots of people reaching out to get on the podcast. So what's going to be happening here soon is the podcast recording cadence is going to kick up into high gear. I think we'll start releasing more than one of these a week in the not too distant future, because that's the volume that's there. So I'm excited about that. Okay. Hope you're having a wonderful day. Make sure you stay safe, and make sure you wear a mask, wash your hands, social distance, and be nice to each other. Okay. We need it. All right. See you next time on the SoFin Podcast. See ya. Bye.